Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to discuss the topic of the moment, which is are we in a stock market bubble? Okay, and I'm gonna tell you what I think about that. I'm gonna tell you if and when it's gonna pop, and I'm gonna tell you a mistake that you definitely not wanna do it. Okay, so leave me a like if you find these videos interesting and subscribe to the channel, and let's begin. Alright guys, so here we are in front of the 2000.com bubble. Okay, now this is pretty obvious. Look at the shape of it. Okay, we started from basically nothing, and look at this parabolic rising line. And after that, here we realize, well, you know what am I buying? And boom, that's what happened. Basically, I dropped a panic and we are going back lower than where we was before. Okay, that's it. Everyone knows this bubble, and this has been a bubble for real. Now, someone could argue, are we in a bubble now? Okay, are we in a bubble now? Why? Because when we take a look at the S&P, it looks like that we had a crash, and right now we are going up, but in the economy, it doesn't make sense. Okay, so that's why people are saying, well, there is the possibility to be in a bubble. Okay, because everyone is looking at this. This is the Fed balance sheet. Okay, and everyone is looking at this last spike. Okay, and say, well, they are printing money, they are putting money in the economy, but fundamentals are not following this. Okay, so basically why prices are going up, it doesn't make any sense. Okay, and this is a reasonable argument. Okay, considering also the fact that basically this is the situation with the unemployment. Okay, we have probably never seen those levels in the entire lifetime. So okay, why stocks are keep to pushing up? What is the thing here? Okay, it is a bubble and it's gonna pop. Well, let's check the definition of a bubble. Okay, what a bubble is. A bubble is an economic cycle characterized by a rapid escalation of asset prices followed by a contraction. Okay, it is created by a surge in asset prices unwarranted by the fundamentals of the assets and driven by exuberant market behavior. When no more investors are willing to buy at that elevated price, a massive sell-off occurs, causing the bubble to deflate. Okay, so basically the idea is that there is something in the market, people see that, and everyone is started to think, well, this is gonna be huge, this is gonna be huge, this is gonna be huge, I have to buy it now, it's gonna be huge. And everyone thinks the same, and everyone is buying, and the price continue to go up and up and up, and news and people, they see that and they say, well, I'm gonna get into because I'm missing out, and so the price continues to go up until the numbers of investors is actually finished, and so no one is willing to buy anymore. And guess what happens to the price? The price stops to increase, and here there is the take profit. And once there is the take profit, the price start to decline, and there is the panic. Okay, so we went up fast, and we go down even faster. Okay, there is one important thing to remember: this increase in prices, it's huge, it's fast, and it doesn't have any sense. Okay, it is completely detached from the fair prices of stocks. Okay, so remember this. This is another very important part of a bubble. Okay, behavioral finance theory attribute stock market bubbles to cognitive biases that lead to groupthink and herd behavior. Okay, when everyone thinks the same about something. Right now, if I consider the overall market, would I say that there is a groupthink and a herd behavior in a positive way? Well, I don't think so, because Whenever I look around, I see people saying, well, the market is a bubble, the market is overvalued, stocks have to crash, a next crash has to happen, and I'm not gonna buy stocks. Some folks, they say, I'm gonna sell everything. Okay, so do I see this group think behavior of a bubble? Well, in my opinion, no. Okay, absolutely no. As an overall in the market, I'm gonna tell you later on about single stocks. Okay. Now, as an overall in the market, we can go to check, of course, what the S&P 500 PE ratio to have an idea. Now, this is the historical one from 80 to 2020. Okay, so a lot. And what we can see is that basically right now we are around 22.32, okay? And we are basically above or very near the maximums of, right, for example, before the 80s and all this period, okay, right here. The average is above 16, as always, as we know, so we are above the average. But would I say are we in a bubble? Is this a value that makes you think that we are in a bubble? In my opinion, absolutely no. Okay. Now look at, for example, what happened in 2000. The PE ratio of the S&P was basically near 45, and in 2010 we went up huge. Okay, it's out of the graph here. So just with a simple comparison, we are not in a bubble right now. Okay, and as always, we know the PE ratio is basically means by the price of something and the earnings that that thing makes. Okay, how much people are willing to pay for $1 of that asset. Okay, that's what the P ratio is telling you. So if the P ratio goes up too much, we can argue that, well, probably that thing is becoming too much expensive. Okay, but right now, is this the situation of an incredible bubble in the market overall in the S&P 500? Well, in my opinion, absolutely no. Okay, absolutely no. Earnings, it is true that in this very moment they can be bad. Okay, this is something true. But look at 2 years from now. Okay, the stock market doesn't look today. This huge unemployment rate, it doesn't make much sense in the market now. The market is not paying attention to it for the simple reason that if the economy will start to go up again in the next couple of years, well, the expectation is that this unemployment is gonna be absorbed quite fast. Okay, so the market is telling you, okay, now I know the current situation, and that's why we had this huge crash, the fastest in the history. So this is why. This is why. But after that, they say, well, you know what? I think that we are gonna recover from that. Okay, it's not gonna be something that lasts 10 years. Okay, so this is what we are getting, and the PE ratio, like that one, well, actually, it can go down even if prices are not going down. Why? Well, simple as that. The economy will continue to recover, pandemic will go away, prices will remain basically almost the same. Okay, there is not gonna be another huge spike up as we just saw from March. But what is gonna increase are earnings. Okay, because the economy will continue to recover. So as overall, if you keep prices pretty stable, but you increase the denominator with earnings, well, this P ratio will eventually go down, okay, and come back very near the average without any stock market crash, okay. Now, bubble, absolutely no. Probably something that we can say is overvaluation, which is very different from a bubble. Uh, some stocks are, of course, overvalued, okay, of course, overvalued, but an overvaluation is very different. You have a bubble when you have basically a fair price of nothing. The stock is worth nothing. That was the key of the dot-com bubble. In the dot-com bubble, we had companies that basically they were just a name on internet. Okay, they were nothing. A lot of them they didn't even have an office or people they were work for. Just a name and nothing more, or just very few things more, and they were publicly traded. And everyone was like, oh, this is gonna be the best thing ever in the world. Okay, and why it was a bubble? Because the prices of those companies they were higher than the fair price of even 1000 times. Okay, because actually some of them their fair price was zero. Okay, they were worthless. And this is what we saw back 2 years ago with cryptocurrencies, with all those altcoins. Okay, that some basically some folks they were at home with their PC and they created a program, an algorithm with their currency, which was basically absolutely nothing, just with weirdo names and things like that. What was the value of those things was zero, but the prices were going up like crazy. So that is a bubble. It's just a speculation. It's just herding behavior. Well, that doesn't make absolutely sense with the true, with the fundamentals. Okay, but do you think this is the real situation of the overall stock market right now? I mean, the overall stock market, guys, we have a lot of companies that are profitable and that they make money. Why I do valuations? I do valuation to understand this with real numbers, okay? Because you want to understand the fair prices of companies, to understand the price in the market, what does it mean? And I did a lot of fundamentals valuation. I shared them, go to check them out. And what I realized about that, I did Facebook, I did Amazon, Disney, also different companies like Boeing, Visa, all those things. What you realize is that those companies, okay, their prices increased a lot, but it is perfectly fine because the fair prices are basically very near the price in the stock market. And when you see that, you cannot talk about a bubble. You cannot talk about those kind of things because it doesn't make absolutely any sense. Okay, now there is one mistake which is a huge mistake, and in that case we can start to talk about bubbles. The mistake is that you don't want to invest all of your money in unprofitable businesses. Why am I telling you that? Because I see a lot of people investing in Hertz, investing in, for example, Nikola Motors, and the price is going boom, high, skyrocket. All those kind of companies that basically you don't know what they are about. Okay, Hertz was going bankrupt. Nikola is just basically just talking right now. And there are a lot of unprofitable companies. Now, what is the problem with those companies? The real problem is that even if the overall market is not in a bubble, what happened? When you have a good business which is profitable, you see something real, okay? You see cash flows, and that cash is real. When they do earnings, and they have net income, this is real. You can go to investors, and investors they can have their own idea on the business and the management itself. But when you show them cash for real, well, guess what? They cannot say anything. They can have their own opinion, but what matters is the cash you put in the table. Okay, but when we are talking about small, unprofitable, and very unstable businesses, well, there is nothing real there. Okay, and everything is based on opinions and enthusiasm. and expectations. There is nothing real. It's just the human brain that makes the price, okay? But guess what? When you don't have things real, it is very likely that the prices you see in the market are wrong, okay? It is very, very, very likely. And expectations can change in a matter of 10 days, okay? And that's why I'm telling you, be careful. Invest in companies that are profitable, because you cannot lie on cash. You cannot lie on cash flows, on fair values of those companies, because you can calculate the fair values of those companies and it's not a lie. But you cannot calculate the real fair value of companies that are unprofitable and they are not doing nothing right now, okay? It's just expectations. And you don't want to invest too much on those things, because believe me, you can hurt your portfolio very, very, very much. Okay. So keep that in mind. It's an advice I give you. Do whatever you want, but that's it. You cannot lie on real cash, real numbers, but you can lie on expectations and enthusiasm. Okay. That's what makes bubble for real. And that what the dot-com bubble was about, okay? Companies that were completely worthless, and what makes the price was just expectations and herding behavior of investors, okay? If those companies, they were making cash and profits for real, you would not have a bubble, okay? That's it. Cryptocurrencies, well, worthless things, 90% of them, 95% of them, I would say even 98% of them, okay? But prices were super high. Why? Just because of expectations. There wasn't nothing real there, okay? So that's why I'm telling you, be aware of unprofitable businesses, because just in that case, in those single stocks, you can actually have super overvaluations, which in some cases we can start to talk about bubbles. Okay, so there is where you really want to pay attention to. Great. Now, I hope you find this video interesting, and leave me a like and tell me down in the comment what you think, okay? What you think about that. Subscribe to the channel, and I wish you a wonderful day, guys. Take care of yourself and see you in another video.